China's retaliatory tariffs against U.S. imports affect only a fraction of bilateral trade, as Beijing finds itself ill-prepared for an all-out trade war with the U.S. One America's Kristian Rouz has that report.
Mainland China imposes 15 to 25% tariffs on a broad selection of U.S. agricultural imports, totaling about $3 billion. The move comes in response to President Trump's crackdown on what a Section 301 investigation found as Beijing's malicious trade practices, and Chinese officials have vowed additional restrictive measures to arrive soon.
China has the confidence and capabilities of safeguarding its own interests. We sincerely hope that U.S. policymakers would carefully hear the voices of domestic consumers and industries and carefully weigh what losses or gains to be brought to the United States.
Beijing's announcement sparked a rout in U.S. stocks as investors and the agricultural industry expressed concerns over China's threats of a trade war. This comes as President Trump's measures against China's intellectual property theft are targeting up to $60 billion worth of Chinese trade, almost thrice the amount of total U.S. agricultural exports to China, estimated at roughly $20 billion. Meaning China's ability to retaliate through trade restrictions is limited, whereas the White House has only started with its effort making the global trade free and fair.
China would not be first to, do this kind of tariff and trade war things. We're always reacting to our actions. And they're a little bit measured in their response already. It's only a small little $3 billion, tariff, on some of the products.
In the wake of recent developments, Beijing called for trade talks with the US, a bid deemed hardly successful as the White House didn't bother to respond to China's previous request for consultations on March the 26th. Additionally, China previously considered seeking compensation for its trade, including through the WTO mechanisms, in connection with President Trump's tariffs on steel and aluminium imports. This was left without White House attention as well. Such developments reflect the Trump administration's hardline stance on other countries taking advantage of the U.S. trade for decades.
The cabinet and the West Wing senior staff, the so-called globalists who had tried to prevent where we are right now are all either gone or leaving. The America First crowd very much in the ascendancy. So I think you'll probably see more sticks as opposed to carrots. But again, this is all up to the whims of the president.
Following China's announcement of retaliatory tariffs, the White House confirmed its own new restrictions on $50 to $60 billion worth of Chinese imports will be unveiled this week. Whilst stakes are high amid the speculation of a looming global trade war, the Trump administration is adamant in pursuing its trade policy, suggesting stock investors had better start pricing in the perceived risks. This comes as both China and the European Union unveiled their plans to impose trade restrictions on U.S. products made in Republican-leaning states in hopes to take down President Trump and return to taking advantage of the U.S. under the next administration. President Trump, however, warned against such measures, promising prohibitive tariffs on European cars and Chinese consumer goods, which would far exceed in scale any retaliatory moves by overseas trade partners.
This is clearly Trump's playbook. He wants to threaten action, use that as a lever to force deals that he believes the United States could not get otherwise, kind of hold that hammer over U.S. trading partners and see what he can get. So there's no question this is a Trump trade policy, whatever one thinks of it. It's the way he's talked about trade for several decades now, and it's playing out exactly the way he wants it to play out.
According to the EU, the bloc could target no more than $3.5 billion worth of US trade, whilst the US could cut its bilateral trade deficit by tens of billions, rendering the EU more inclined to engage in talks. However, the prospect of trade talks between the US and China does not appear realistic, albeit Beijing has been calling for dialogue for months.
We hope that the United States will recognize the situation clearly and act in line with the historical trend of economic globalization and trade and investment liberalization. We urge that the United States abandon the unilateralism and trade protectionism, adopt practical measures, and solve the differences through dialogues and consultation.
Additionally, Beijing is planning to bring Chinese technology stock listings back home from overseas exchanges. This comes in response to the Trump administration's crackdown on Chinese investment in the U.S., as Chinese companies have sought to get their hands on U.S. technology through mergers and acquisitions. Experts say Beijing's plans might stumble upon the ongoing overheating in China's real estate sector, as well as the capital flight from the mainland, stemming from rife corruption, shadow lending practices, and structural weakness of the Chinese economy.
If China agrees to import more from the U.S., actually the trade picture could be improved rather than be worsened. So basically that is something we have to prepare rather than always talk about the downside risk from the trade war. For China, the problem right now, the down risk comes from the de-risking and the property sector. This is, I think, the key risk for China in the coming year.
Economists point out a full-blown trade war could cost the global economy up to $470 billion in lost output by the year 2020. Meantime, most experts agree malicious actors would suffer greater losses due to their exposure to the markets they are comfortably used to taking advantage of. Kristian, Rouz, One American News.
We can use your help. Call your cable provider and kindly demand that One American News is added to your lineup. Call today.